better future. What is that? What would you like to see in a better future, and how do we achieve that better future?
This issue of confidence and trust is important, and I think it is one of the major issues that we need to address, because the SDGs, NDS1, long-term savings are all linked together. There's no doubt about it. They can actually all benefit from each other. So before we move into any of our questions, I'd just like to open it up to my two panelists who have just joined us, just for their initial thoughts and comments. Sam, let me start with you, and the microphone is there. Just your initial thoughts and comments. You saw the doc's presentation. Obviously, I will be asking you direct questions, but just your initial thoughts.
Thank you very much, Andy. I think the subject of savings, even before we talk about are they short-term or long-term, is one that should occupy us at all levels. For reasons perhaps we sometimes don't think about, but do manifest variously in our lives. You do have targets you have in life. You want to embark on a project. You set aside money for it. You fear some risk. You probably have a kitty somewhere for that rainy day to make sure that it can cushion. I think when we then talk about savings in the context of long-term savings, mainly one recognition to be made is that within our economy, a phenomenon that also has visited the savings industry is informalization. So one could argue that there is still some savings activity happening, except that it's informalized. And maybe when we think of it that way, we then have to say, does it still serve the purpose, and at least do so optimally when it's informalized? And when it's informalized, for those that say, yeah, I've got my little arrangement, another one says, I've got my little arrangement, we have to say, is that the best way? And I would posit to say it definitely is suboptimal. There is a benefit in pooling savings, where when they are pooled, the good and the benefit you get out of that is greater than the sum of the parts. And one example is the one that I probably alluded to earlier. If we think at the economic level about the cost of the finance arrangements that we arrange for big projects here, you will probably find that we are missing the opportunity to optimize that cost of financing because we don't have enough of our own savings pooled to participate alongside the financiers. So we are paying a premium for that. The second way that I would put as a source of suboptimality is if you reflect on just the progress we would have made based on pooled funding arrangement in terms of just scale of projects. I would again posit that we could have achieved more. Let me put this into perspective. This economy, 6 years back, we would not have generated foreign currency inflows to the extent that we are generating them today, which is perhaps about 7 billion in exports, maybe another 1.5 to 2 billion diaspora funds, maybe another 500 million in grants and so forth. Those inflows are higher than what we used to have. But we can't account for them entirely. And the reason is informalization. These monies flow and you don't see how they flow. So our balance of trade, balance of payments has not given us the benefit of the increase in the generated effects that we have done. Now, that's again an issue you find when you don't formalize the savings. But yes, that's a starting note at the risk of consuming time for others.
You, Sam, please go ahead.
Okay, thank you very much. Maybe just a point of correction. I'm polite, not Cadbit. I'm studying for Cadbit.
Okay, thanks, Yorati.
Yeah, and the market conduct manager in the Patent and Life Department of the Insurance and Pensions Commission. Yeah, the issue of long-term savings is very key for the development of the economy. I think like what Prof has already indicated, we really need to go back to savings so that we can ensure that at least we can give that trigger for economic development. Maybe just to hazard some few points with regards to the erosion of confidence, especially when it comes to the insurance and pensions industry. I think like what has already been indicated is that during those two episodes of current change, the first one in 2009, then the recent one in 2019, indeed pensioners had lost value to an extent that if you look at the monthly pension benefits which pensioners are getting, some of them, they don't even make economic sense, especially at the backdrop of increased charges. We then ask yourself, even from a regulatory perspective, to say, if this person is being paid this much, what would be the net amount which the person would receive as a benefit after taking into account of those costs related to maintaining the account? That notwithstanding, I just want also to indicate that if you look at the structure of the pensions industry, I think you are aware of the fact that we regulate the private occupational pension funds. And on top of those private occupational funds, we used to have personal pension plans, which were very active, where one would just go to a life company and say, I want to purchase a personal pension plan without any link with the sponsoring employer. But what has happened now is that the personal pension plans, they've actually declined and they are now close to zero in terms of the new ones which are coming on board. And what has remained is the aspect of those employer-linked pension funds, when people are now contributing because it is an arrangement between them and their employer. And from a regulatory perspective, the quantum of personal pension plan is actually an indicator of confidence in the economy. So we really need to work together and ensure that we restore confidence. I'm happy that the Prof has already talked on some of the ways which we can then use to restore confidence. But having said that, I just want to reiterate that the long-term industry, specifically looking at the life industry and also the pensions industry, they play a pivotal role if we are to achieve these SDGs. I was actually going through some of the initiatives and some of the interventions from the previous speakers where we're looking at those barriers, SDGs. And what we have also observed is that as the insurance and pensions industry, we play a very big role when it comes to the achievement of those SDGs. Maybe times won't allow me maybe to go SDG by SDG. But what I just want to indicate is that there are a number of SDGs. If you look at number one, that of poverty eradication, number two, which relates to eradication of hunger, all those issues, we play a very pivotal role. Like if you look at SDG number one, that of eradication of poverty, you know, when one is going past the working life and you are now retired, definitely you need some monthly pension benefit, which is a bit reasonable, with some reasonable placement ratio. But now if one doesn't have any form of income, what it means is that they are going into that same poverty trap that we are trying to move away from an SDG perspective. So we really need to ensure that the industry is kicking. And so is the case on eradication of hunger. The industry plays a very pivotal role. Then when it comes to affordable clean energy, I think the Minister of Energy has already alluded to the fact that there are quite a number of projects which relates to green energy, which this industry is actually investing in. In fact, we have issued quite a number of instruments which have been conferred prescribed asset status to allow the industry to invest in such. And like what has been said, we also have this new energy fund where the industry is investing. So there are a number of contributions that we put as an industry, but we could do more if we go back to savings as a culture. I think that's my submission.
Thanks, Oyati. Now, San, let's come to you. NDS 1, we're now putting in submissions for NDS 2. And of course, one of the underpinnings is creating a savings culture to make both of those development plans work. You saw the Prof's research that he did in terms of some of his recommendations. So I suppose the question is, from your view, you run one of the largest financial services groups in Zimbabwe. How do you build? How do you bring back this confidence? How do you get rid of the lack of confidence and trust, particularly if you look at it from a financial services sector perspective?
Thank you. I think if we have a role as a financial services sector to contribute to the rebuilding of confidence. There is a backdrop, and I think which we always would like to also ensure that it is looked at. And that's the backdrop painted by Professor here of policy inconsistency, the lack of stability in some of the enabling infrastructures, whether it's policies, legislation, or just directional thrust in terms of the priorities in our economy. I think we have to deal with those as an industry by making the right contributions into the policy framework. One of the things that we always have to reflect upon is, have we actually done our part? Often we go around and say policies are less efficient here, they are not efficient there. But the question we must also ask ourselves as the industry is, have we actually brought to the table the recommendations and made viable considerations that could actually assist policymakers? That's the first part. When you look at some of the things that I think we need to put on the table, they talk about formalization, which is a theme that has been elaborately covered earlier. Now, if I give you some statistics, the gross domestic savings as a percentage of GDP by the World Bank, as measured by the World Bank, 2022-2023, Zimbabwe is on 5.6%. That tells you that 5.6% of the value we create is left for redeployment into further, growth initiatives. To juxtapose that against other economies, South Africa is on 15.6. It's also not great, but it is saying that they are still saving about a fifth, close to a fifth of the value that they generate. You find higher metrics in Angola, 40%. You find others in Tanzania, 38%. And when you're thinking about long-term growth, we are needing to say we should also create the savings, broadly speaking, that then anticipates into the long-term savings for the industry. So perhaps one of the things we need to say is, how are we spending money? The money that I've already said we have generated more exports. We have sectors that have registered record growth rates, and subsectors that are new minerals being mined. All of this is value that's being generated. But how come we spend more to the extent that we only say 5.6%? And when you think about that penetration related to long-term savings now in the industry, you'll probably then find that there are some policy interventions there. Earlier in the morning, we were told that we import $900 million worth of cars each year, $100 million worth of tires and accessories. We haven't accounted for the fuel. Now, that's in an economy which has got 5.6% savings. It then filters down to the mindset, the culture we are creating, supported by people who could have probably done something to generate returns and then push that 5.6 up. Instead, our preference now, cultural, seems to be, if I can't save to put into a project, or I can't get a financial services product that will give me returns, I would rather spend. And sometimes we spend without knowing that we are creating expenditures. That fuel needs to be maintained. So that car needs to be maintained. That car
I don't know how the math works in the allocation of incomes in the household. I can imagine that for some household, that vehicle is becoming a major cost allocation. And then we ask the question, so what does it tell us about policy? Maybe it's saying our transportation systems, our transportation infrastructure, there is some inefficiencies there. The rail system perhaps needs to be resuscitated to replace some of the amount we put into the 900. Perhaps we need public transport systems that make sure we increase the average number of passengers per vehicle. Because today, maybe it's averaging 2 people per vehicle, burning the same amount of fuel, costing the economy in maintenance, and these costs, and they're going to expect us leaving less for savings. So there are policy interventions I believe we need to think about to say, how do we start to shape preferences and allocations of incomes at household levels so they start to save? And then the financial services sector, which is more directly now to our sector, create solutions that also demonstrate that people can have more confidence. And I think the 3 things we need to do there, we must be transparent, we must co-create solutions with the customers, we must give them visibility of what they are investing in so they can relate, walk the journey together so they can change and shift decisions as we advise them. Thank you.
Thanks, Sam. And one thing that's interesting from an individual's perspective, of course, I think the Prof mentioned this, is one, you think I put my money in the bank, all the bank is going to do is take money from me. Okay, they're not going to pay me money because very few people ever get any interest on their savings of any kind. So therefore, I may be asked to put money into a bank and keep it there in savings where I don't get paid anything, I get charged. That's number one. And number two, a combination of, this is not necessarily the financial institutions issue, it could be a central bank and government issue. I think the best I can point to is one-to-one. Do you remember one-to-one? And the problem with one-to-one was that when they changed it, it destroyed us again, didn't it? We were all happy, one-to-one, everyone was cheering, and then it went, and suddenly our confidence crashed again. And I think it's that mindset that Sam alludes to, in that it's almost as if you speak to someone, and I think we need to try and change this. The concept that whenever certain sectors of the economy speak, we don't believe them. Have you noticed that? Doesn't matter what, whether it's the truth or not. And most of the time it could be the truth. We're like, no, that person said it, it doesn't hold water. Kayati, if I want to ask you this, you mentioned earlier, and I think I want to get back to this, I want to look at the life and pension side of it. I mean, I did quote numbers earlier, and I think Sam backed it up, that 87% odd is funeral policies, okay, which is, I think everybody here has a funeral policy, correct? Yeah, everybody. But if I said how many people here have pensions and life policies, I think very few hands will go up. Now that must be a concern for you because, of course, that speaks directly to long-term savings. And in fact, it's a barometer of how savings isn't there, in fact, because life and pensions are savings. That's how pension funds and so forth create long-term spending, long-term savings they can spend in things like long-term infrastructure. From IPEC's perspective, I mean, what do you think can be done to stimulate this concept that it's still viable? Because, of course, one of the biggest issues is stability, isn't it? Because one of the problems is that if you asked me to take out a ZIG life insurance policy, I would probably laugh at you. Because already if I'd taken one out beginning on the 5th of April, right? Think about this. If I'd taken out a ZIG insurance policy on the 5th of April, I would already have lost 43%, right? And climbing. And that's only 6-7 months. So therefore, you're talking about a US dollar-based policy, yet we know that we may be moving to a fiat currency in 2030. So if I do take out a US-based policy, it's only after 2030, because what insurance company will give me anything past that? So from IPEC's perspective, give us your views on that and what you can do to stimulate the life and the pension side of insurance so that we can stimulate longer-term savings.
Okay, thank you very much. Yeah, I think I agree with you to say the structure of the insurance sector is changed. If you look at the 2017 figures, the insurance sector used to have 60% of the business return being life assurance sector, and the remaining 40% used to be the short tail insurance. But currently, if you look at those figures in terms of gross return premium, we now have a situation whereby the bigger percentage is now on the short term, and if a very insignificant percentage is now on the life side. We're actually looking at our indicative figures for Q2. It's actually reflecting that the short-term side is now commanding around 60% of the gross return premium, which means that there has been a shift from long-term to short-term. Yet the economic thrust is to have more on the long-term side. Then in terms of what we can do, or what we are doing from a regulatory perspective, I think like what has been indicated, the issue of confidence restoration, there are quite a number of variables which come into play, which include your economic stability, the aspect of current stability, but operating within those confines. What we have done is to allow USD policies through a statutory instrument, which is SI 2NT of 2020, where the statutory instrument is clear to say those who are contributing in USD, the investments are supposed to be in the same currency, and so should be the benefits which are paid. So in our view, even by looking at the current business for long term, that has gone a long way in trying to boost some stability as far as the insurance industry is concerned. Because even from the recent survey which was done by Simstats, it's showing that the bulk transactions are being done in USD. And the aspect of ZIG, like what Prof has already indicated, if we had month-on-month inflation of around 5.8% in September, and we are already at 37%, I think that talks to currency instability. But we hope that the monetary authorities are going to work on it to ensure that the currency is a bit stable, so that we can move on.
If I may follow up on that, you talked about US dollar, you buy a pension or life insurance in US dollars, you get paid out in US dollars because the investment should be in that. But then you still have the 2030 problem, don't you? The 2030 problem when we're moving away from all of that and we should be back to our fiat currency, and that should be only the ZIG. So how are you going to manage that? Because you're saying right now I can go to Sam and say, here's my $100 a month for the pension, yeah? But then come 2030, what happens?
Yeah, I think like what you are indicating, the asset of long-term products, it also requires a long-term horizon in terms of plan. But what we only have for now is that confirmation that up to 2030. Then what is going to happen beyond 2030? I think from where we stay, we don't know. That's the truth. But what we are only doing is to continue to engage the responsible authorities. Because one of our functions as Insurance and Payments Commission is to ensure that we engage the policymakers, to ensure that whatever is being done, it takes into account. But we are happy from a legal perspective that there is already a statutory instrument that we are hoping that it's going to continue to apply even beyond the 2030, so that we can ring-fence the aspects of benefits which are coming from the long-term products. Because to us, it remains a very key issue when it comes to long-term products if we are to boost confidence in the long-term industry.
Prof, let me come to you, Prof. Looking at your research, bringing in this 2030 aspect and the fact that all things being equal, the 1st of January 2030, we should say no more dollars, we're back to the ZIG, that's it. Is that itself alone an issue to look at when we're looking at confidence and long-term confidence? Because already just knowing that it's hard to make me feel confident now to invest in something that in 5 years I really don't know what's going to happen. What are your views?
Yeah, thank you very much. I think we pray that the policymakers will look at the issue soon Why? Because for long term, when we say long term, from us economists, we are talking of 20, 30 or so years. So now, 2030 is very short term. So now if I want to invest for my pension or for my, let's say to buy bond for my kid who is 2 months, to say when he or she is 20 years, she can go to invest using what I'm saving now, it becomes a challenge. So that or it's only 2030 is 2 days or so from now in terms of long term in the financial sector, in terms of savings. So I think my view is that I hope policymakers will look into that issue. I am sure also my colleagues from the financial sector, they will put their views in, they agree with me to say investment tied to 2030 and the dollar goes out, yeah, it may make people unsettled. That's my thinking as an academic.
Thank you. So maybe I will delve into some space here. But if there was one thing that perhaps should be a recommendation to policymakers, it is to prioritize confidence above everything else. Because the alternative is we then continue to deal with symptoms. And confidence is earned. And the way to earn confidence is to work on milestones that will serve as proof points. I think you make commitments that this is what I will do, which is going to be favorable. And you work at fulfilling it and create the proof points for it. Now, currency, I think the debate should actually probably move from is it US dollar or is it ZiG to a set of milestones we put on the ground and say, are they creating the confidence and how are we doing on the confidence index? Because what we are dealing with is a contest between confidence and the US dollar. So to replace the US dollar, we ought to have confidence. And one would wish to have a place where there is enough confidence for people before 2030 to say, actually, I don't need to worry now whether I'm transacting upon this in US dollars or in ZiG, because the confidence has actually preempted that need and makes it unnecessary to think about. So perhaps there are ways that that could be done, which should be the policies we make, the commitments we make, we fulfill them, and as we fulfill them, we create the confidence. When we fail, we don't necessarily, just brush it aside. We account for that and commit a new milestone and move forward. So I would posit that maybe we need to think about what are the set of milestones and targets and interventions which you could put as pegs in the ground and say this is what we are targeting to do on a progressive timeline, and which we will fulfill and measure confidence and the strength of that confidence as we travel that road.
So, and I want to talk to you about confidence, because you did mention it earlier, and we did talk earlier in the summit of informalization. And in fact, what is it, between 4 and 6 billion US dollars, I think the number is floating out there. And it's been floating out there for a long time. It isn't been fluctuating. So in other words, we have about $4 billion worth of savings out there, but they're just not sitting in banks or sitting anywhere where they can be economically used. They're sitting in pillowcases. I remember a case where I was reading in the newspaper, someone in Budirio, they burgled his house and they got away with $450,000 US dollars. And this is a house in Budirio, so you can imagine how much money is out there. If I can call it the unbanked or the unsaved. Talking about Old Mutual and looking at your own organization, how do you think, because that is also a form of confidence building, if we can get those citizens who are in that sector to start savings and banking and bringing money in to be economically gainful, obviously that will be a huge boost to our economy. So as Old Mutual, what are you actually doing? What are your strategies to try and bank the unbanked, and also trying to promote a savings culture? What strategies do you think yourself were employing, or maybe recommendations to the industry?
So one of the things that we are doing is to go into the spaces where the circulation of money is probably less formalized, and thinking about solutions which are adjacent to what we are doing within the core business, but are extending our frontier toward those spaces. So when you think about transaction platforms and you create a transaction platform that is serving the need of a small trader, so they at least interface with a formal platform at some point. That, we believe, is one of the ways that will continue to encourage the money to come into formal systems. Once it does that, you probably want to enhance the offering and start to think about what else and what next can they buy, and buy and relate with it closely. Because I think when you don't have confidence, you're always wanting to watch and see what's happening to the dollar that I loaded yesterday. And if I bought a product, where is it? So it's to think about how do we make these products relatable to those segments and for them to be comfortable, to test and try them. One of the reasons I think the funeral premiums and funeral products have probably gained the prominence is that people have seen their contributions allowing them to bury their relatives. And they experience it as they go, rather than wait for at some point later, because these things happen. So they are actually experiencing the outcomes of what they have served towards. So it's to think about what else can we put into our products which can be experienced as the people go, so that it's no longer a 20-year, but it's a 20-year with proof points along the 20 years, because it's really trying to persuade people through some proof points. And so those are some of the interventions. The last one that I would probably want to make is it's to also probably try and understand the ecosystems. One is, if we get $1.5 billion into the economy coming through diaspora remittances, there are use cases for the diaspora remittances. How do we make sure that financial solutions and services become relevant and are embedded within the channels that you see in the ecosystem?
It's fascinating. I think we did the first Better Future Summit, and I think one of the things I mentioned, I think some of you were there, I mentioned about looking at insurance policies or policies that looked at the vendor or the small scale, the informal sector. It was fascinating because last week I was at the CSO Nango CSO conference in Nyanga. And in Bulawayo, one of the groups, they represent 64,000 vendors, have put together such a policy. The policy covers medical, it covers stock damage if you have fire, it covers a little bit of personal injury. So the insurance company that's done that has found a product that speaks to an informal sector who aren't banked and aren't formal. Because what they're getting is they're getting $5, $10, $15 premiums every month. But what it does to the vendor, who right now has got no insurance cover, if their stock burns down tonight, right, they're broke. That's it. They're done. But at least if 30% of their product is insured, they can at least get paid out, go buy some more product and continue the process. So I think that is what Sam is possibly alluding to, is how do we make products relevant to the demographics or the sectors that we're talking to, and also what value do they get from it? Because I think that's the key, isn't it? What do you get? What value do you get when you do start getting these products from financial institutions? Prayati, just a quick one for you, and then I'll have to open it up. In fact, before I do that, I'm interested in, we're talking NDS 1, but of course I always like to think of NDS 2, because we're right here, isn't it? 2025, NDS 2. In fact, we already started consultations for NDS 2. So I'd just like to ask you and Sam, and then we'll open it up to the floor. What do you think you'd like to see in NDS 2 that speaks to your industry, IPEC, that speaks to a long-term saving culture? Is that something you've thought through?
Yeah, definitely. I think we are looking forward for ADS 2, given the significant contribution that we have made on NTS 1. if you look at the priorities of NDS1, the national priorities, as an industry, we have contributed a lot. Maybe just to quickly go through some of the initiatives that we have done in terms of attending to the national priorities. One of the key priorities that we contributed to relates to economic growth and stability. If you look at the economic growth national priority, as an industry, we are contributing about more than 10% of the GDP. If you look at the current GDP figures against the industry's assets, we then measure a metric that we track, which is insurance and patents penetration, where our contribution is more than 12%. In as much as there's been a decline in terms of our industry's contribution, because way back around 2016, the patents penetration was around 20%, and it has declined to 12% because of the issues to do with confidence. So what we are looking forward to on NDS2 is to have issues which address the long-term saving from a policy perspective. One, where we prioritize the aspect of compensation. I think like what has been indicated, one way to restore confidence is to ensure that you have dealt with the past. And from the commission of inquiry into the loss of value that was done, it was indicated that to a greater extent, the loss of value was also caused by the macroeconomic environment. So we are continuing to engage the policymakers so that they can also prioritize the issue of compensation for pensioners who lost the value.
They were talking about Justice Smith, is that right?
Yeah.
Yeah, okay. Sam, just a thing before I open, just your views, NDS2?
I think the theme that I would really look forward to, perhaps supported by a number of policies, is a theme of formalization in NDS2. Now, to be upper middle income, I think it has to also reflect in the level of formalization. But there is a cause and effect element to it. The more we are informalized, the more we make it difficult to allocate resources to priority areas, and we continue to be fragmented. We must, just to picture this, informalization means that you don't have to know how I'm getting my money. You don't have to know how I spend it, but I will use the formal road anyway. And I will use the formal hospital anyway. I will use the formal infrastructure anyway. But you don't have to know how I can pay for it, and I don't have to. Now that dislocation alone means that the consumption of the resources and the capacities that we create is going to always be higher than how it's supported by the earning capacity. And just that dislocation means that we will not make progress. Unfortunately, that informalization means sometimes that we spend to benefit other economies without us knowing, because we can't account for it. But bringing it closer home, it also means that as government, policy efficacy is compromised. Because just the mere effect of informalization means that you can announce policies, but they won't be effective. Because the informal person, his job often is to now say, how do I escape this policy? So it will always be a contest, and a very, very strained contest. So I think if we were to adopt a theme in the next round of emphasis, I would say formalization. Makes it easier for policy, makes it easier for allocation of economic resources, and to push for the long-term savings and create capacity for the economy.
Thank you, Sam. Remember how we started and I said to you how you'd never want any economic policy or any economic policy stakeholders to be following the market. Well, unfortunately, this is what lack of confidence does. We devalue to 25, the market devalue to 40. You will devalue to 40, the market will devalue to 60. That is following the market, and the market not really having any confidence in your own policies. And I think these are some of the issues that we're discussing right now in this segment, how to restore that confidence. Right, I can open up the floor for a few questions before we close up. So, any questions on this? Farai is there in the front. Anyone at the back? Okay, that's it. There's one Farai. Oh, there's one to Tendai as well. And Puar as well. Please go ahead, Farai.
Thank you. Okay, the first thing I want to say that we're looking at a very different economy structurally, because in the past, when we had these things working, savings, pensions, and so on, we had a formalized economy. People were in employment. There were large corporates. The informal sector was very, very small. But now, what we are looking at right now is we've now got most people are either informally employed or they are self-employed, right? We've got few large corporates which are doing things. So what you find is that the priorities or the mindset of the people we are dealing with now is very different. Employees would be looking at savings to say, okay, every month I'm getting my 500, I put aside 100. An entrepreneur thinks very differently. An entrepreneur thinks in terms of, okay, I take my 100, I put it here, I'm going to get 150. Not right. So, number one, there's that to contend with. Number two, the entrepreneur is, because in the past, again, you found that with the financial institutions taking these savings, they would give loans in the form of salary-based loans, because these were employees mostly. They would also give loans to corporates. Now, you find that for us, for most of us who are even now in, whether it's informal or SME sector, I put my money in the bank in the form of savings. I can't get the loans because the banks are still giving loans to salaries and to large corporates. So again, you see, there's a dislocation. There's no incentive for me to then put my money there. Three, you look at all the construction, all these cars, all these things that are happening right now. They are not being financed by banks. They are being financed by these structures that you are trying to now disrupt. But the question becomes, because, for example, most people, the first thing they want is a car, the next thing they want is a house. Now, if you are not giving the loans, because we know that the houses that are out there, they are not being built by mortgages. They are being built for cash. So these are the realities that I would say we need to look at in terms of promoting savings. Then the pensions. Pensions have been in crisis even before, or regardless of the situation that we have in Zimbabwe. But Zimbabwe obviously has had its own peculiar, even in developed countries, pensions are not working. People have to actually come up with alternative plans to take care of themselves in their old age. Number two, like we are saying, the economy has structurally transformed. If I'm running a business, I'm not expecting to retire. I'm expecting to run it until I die, right? So the incentive is not there. Number two, this issue of confidence and trust. I think trust is the main thing. To say that I don't trust that in the future, if I even put my money back into a pension scheme, and something happens, we know we are talking about 2030 right now. But I can tell you, we just had the ZANU-PF conference. The ZANU-PF made two critical resolutions. Number one, the party is superior to the government. Number two, the party wants to see ZIP back now. They are not even waiting for 2030. So these are the things that people look at, and then they say, you know what, I would rather I hold my money in cash. Because cash, no one can do anything with it. But if my money is in the bank, if my money is in a policy and so on, it can be tight. So I'm just giving you the perspective from some of the stakeholders that you are trying to work with.
Thank you. Do you remember recently there was a rumor that the central bank would descend on all of the nostro balances? I think that was the latest rumor, and the governor had to come out and say, no, it's not true. We're not going to take anything. Do you remember? And that was one of the directors made the statement. And this happens, and that is the lack of confidence. Tendai, I think, is it Tendai? She had, oh, sorry, cool. Okay, why don't we start here? You have the microphone? Go. Yeah, sorry, Tendai, we'll come to you.
So, if we've been to zero before, and we've lived and survived and come back, what room is there for totally radical thinking by the central bank or the governor or the minister of finance to say, we're trying to control this thing called the market, and it didn't work. What can we do to get out of the way? I'll give you banking example. Why do I get 0% on my money or 2% or what have you? When Kuchimbadzo, you know what interest rates are, and people can borrow even in dollars and pay it back. Why don't you get out the way and instead of setting interest rates from a central bank perspective, say within these upper and lower, the market must do what it needs to do. To encourage long-term saving, it needs long-term actions, it needs long-term confidence, and I don't see how our SI addicted Thursday and a WhatsApp message comes in through a group, the SI so-and-so has come out and changed. Where can the central authorities gain the confidence to actually to get out the way and try other things rather than hitting the same old nail, the same old way, getting the same old result?
What do they say? Keep trying the same old thing, hoping to get a better result. Turn back.
Mine is a very simple and straightforward one. What are the lessons that, if any, that we have learned from the informal sector that we can use in the journey of formalization? Because clearly there is something there that seems to be somewhat working. And I will give you an example. In my other life, I represent a constituency of women. And over the last 15 or so years, the model of internal lendings and savings has been working. And that is what a lot of women have built, whatever enterprises that they built on. What is it that we can learn from those kind of models? They come with risks, which are risks that can probably be mitigated by a structure like Old Mutual, for instance. So these are things that obviously people are putting their confidence in, and they are actually putting their investments, because when people are borrowing, they are borrowing from something that someone is actually saving. It's someone saving that is lent within the group, and like one of the speakers said, at a very high interest rate. And they'd rather put their money in that and borrow outside of that. Borrow from that. So what are the lessons? Has Old Mutual examined some of these schemes that seem to be thriving really well amongst the community, to see how those can be integrated into whatever out-of-the-box potential products that they could offer the market?
Great, thank you. Let's take a final question. If there's no more, I'll open it up to the panelists. Patrick, can you see anyone back there? Oh, Patrick, behind you, sir. Here on this table here. There we go.
Yeah, my question is directed to Makochekanwa and Sam. Should things not change policy-wise, environment-wise, and build that confidence and that trust, that trust currency that you made reference to? What are the options for the savings agenda or culture for the country and for the insurance industry going forward? What are the options that are there, assuming that nothing changes?
Right, thank you so much for those questions. Prof, let's start with you. I think you've heard the last question, but I'm happy for you to comment on any of the others.
So thank you for the comments. Maybe let me start with the last one. Should things not change in terms of what do we expect in terms of savings? And it's unfortunate. You see, we are, Aristotle say we are a political animal. We are human beings. If we don't have confidence, then we will continue to land on that parallel lane No confidence, no savings. As simple as that. I think in my position, I say we are all patriotic, but we are rational. Our actions are guided by saying, if I save, what will I have? So that's why we are saying all we want, if these policies or actions, some of them are put in place and adhered to or implemented, at least the confidence or trust will be built so that at the end of the day, savings, long-term and pension, will start kicking in and go back to what is ideal. But specifically, we question if things don't change, we are human beings. People will act. Things have not changed, so they will not change their behavior for all the reasons that we have said here. So then, I'm not a politician, but he raised some issues of a resolution that was passed by a party, and also someone mentioned that the one point the RBZ directors say is something. That's the issue now. When it comes to money issue, any one word can reduce confidence just like that. Money is not other sectors, whether mining or what. That's why you see in ideal economies or money things or changes are announced at midnight to say immediately. So now the resolution of the party or the sentiments of the director, even if it's corrected, but it damages the trust and confidence. As far as man is concerned or savings, any slight word can put a sway in the thinking of people because we all want to safeguard our heart and currency.
Thank you. Sam, I think there were quite a few questions directed to you.
Yes, so there was a question around small businesses used to their ways of doing things, and if they are working, how do they get incentivized to change their ways? I think within that question, perhaps one thing that would be useful is to delineate between small businesses, because they can be small businesses that are formalized, and then you will have informal businesses. Unfortunately, there can also be big businesses that are informalized. And so when we think about formalization, we are thinking of just ensuring that we are using formal products, channels, and these are also, according to the laws, the spaces created within legislation and regulation, but which are also in turn designed for the greater good of the beneficiaries. So I think that small businesses that are formal should be supported. Small businesses that are informal should also be supported to formalize. And I always argue that if you want to grow, at least you want to benefit from the benefits of being formalized. And some of those benefits are just being known, have a fixed address, be a consistent deliverer of what you deliver, and build a track record. Start to build a non-tangible asset, which is based on trust. That is very difficult to do if you choose to remain informal. And that dividend sometimes is overlooked. But once we talk about loans, because that was the second part, small businesses, the informalization phenomenon sometimes is because the financial services is failing to meet the requirements and the needs of those players. They can't borrow. There's a bit of a chicken and egg situation there. For you to borrow, you build a credit profile. That credit profile means that build some transactions that we can see. Then you build the capacity to borrow. Those that have done that are borrowing today. And they are actually growing. We have seen, I think an example is maybe some schools, because they can't afford to be entirely informal, to be entrusted with school children to come to that school. We have seen schools that have grown from being small to opening next school and next school. And that's because they have built a track record in the form of financial services. So the products are there, they can be consumed, but I think there is also a part to be played to create that. I think a responsibility and a task we also would take in the financial services sector is to continue to look at our products and say, do they actually answer directly to some of this? And there will be improvements that we will see. Pensions have been in crisis even before and outside our Zimbabwean circumstances. I've got people that are better qualified than me that are sitting in the audience. I'm looking at Nkoma Dak to comment on this. But one comment I would make is, when the pensions converted from defined benefit to defined contribution, and this is a global phenomenon, it was a realization that the sponsors of the pensions were not going to be able to sustain the benefits the way they were defined under traditional and historical arrangements. And that would have been a lot of capital, and the cost of capital was suboptimal. When the change was made to defined contribution, perhaps as an industry globally, what should have been done better at the time, and I speak under correction from those more periods, is to say that the gap, the underlying gap will still be there. Except now it's going to be defined by your contributions and the investment returns on your contributions. You contribute less, your income replacement is less. So sometimes people expect a better life after retirement when their contribution rate is actually smaller. I mean, just check the contribution rate that you have got. We checked on a few pay slips. It buys 2 loaves of bread, right? That they are looking to meeting medical health, the 2 loaves of bread, plus a fuel for that car that was imported in the 900 million, plus the tires, plus everything else needs to come from 2 loaves of bread saved on a monthly basis. If you're talking about spending also on a monthly basis. So defined contribution means you contribute more to enhance what you will get, even as investment returns are also supposed to support that. But I think one of the things that then is behoved of the industry is to say, do we still call it Mujigandigere? Sorry to go to Shona here. Because it was Mujigandigere when it was a defined benefit according to the last salary you were earning, which we have already said globally, it couldn't quite be sustained. I think we need to now also think of changing our mindsets. The pension post-retirement arrangements are necessary as a cushion to allow some minimum upon which you can live. There will be adjustments to be made. If you are doing 4 holidays a year, maybe you now do 1 after retirement, because it's not Mujigandigere. It's some starting point on a pension arrangement. Sorry to go to the last one. Yeah. So the last one was about interest rates. Can I not get interest rates because in other areas? Maybe we can combine that with the observation from Tendai in terms of what do we learn from the informal sectors. There are definitely a number of lessons. I think the first one is that a market left to operate as a market finds a way to work. It finds a way to optimize how you spend, save, and how you manage it. I think the one lesson is, therefore, let's allow the market more space. The second lesson, and that's a broader one, it's a market-wide, it's an economy-wide. If we allow market and market drivers to shape how people behave, there is value that will generally, and if we then support that with the relevant policies, we can optimize what comes out of that. I think the other one from the specific example shared here is that confidence is still central. The reason these groups can trust Prof polite here and say, let's form a group here, it's because we can trust each other here. And we've got confidence in each other. In fact, to the extent that when I lend, I don't need security. So that's how strong that trust is. So if there is any lesson for us, is to say, how do we promote interactions from which we derive this dividend of trust, maybe in the credit profile if we are lending, or in the ways that we design products in savings if we are creating saving solutions. So I think we need to continue to learn on that front. interest rate definitely is being paid on certain products. Maybe one piece of homework we should also think about as financial services is, are we actually advertising enough the products that are interest earning? You see, because the reason these products are different is sometimes for that reason. Some of our customers, let's say for banks, might be expecting an interest to be earned on a product not designed to pay interest. So if you leave your money in a demand deposit account, what you're telling the bank is, I can come back now. I can come back tomorrow to pick this money. The banking practices are going to be informed accordingly. But if you say, I'm leaving this money for 30 days, which is what the savings people do, they actually give timelines, isn't it? And they're not coming back. I can also now, as a bank, say this is the interest, this is the profile, and I can create a product. And those products are there. I think we need to market them more. They are there in unit trusts. They are there in some savings, in short savings arrangements. They are there in bank savings arrangements.
Brilliant, thank you. Right there, we'll give each of my panelists just 30 seconds just to wrap up, and then we'll move on from there. But why don't I start with you? Just 30 seconds to wrap up in terms of discussion. Of course, we're talking about the SDGs, NDS 1, and long-term savings.
Yeah, thank you. Maybe just to address that, one of the key lessons that we've learned is that we need to provide products which are demand-driven. Like what has happened on the informal sector side, we issued the micro-pension framework and the micro-insurance framework, which is a bit flexible to accommodate the ones in the informal sector. And one of the key issues, one is to do with the flexibility in terms of contributions. Instead of them having monthly contributions, they can pay once after every 2 months or once after every 3 months to accommodate their needs. Then the other issue is that as we try to boost confidence, what policyholders and pension scheme members are looking at is a situation whereby they can benefit now rather than just waiting on retirement. So there is also scope in the micro-pension framework to have more like a two-pot system where they can have some access now from the saving side and have something waiting for the retirement. I think those are some of the key takeaways that we noticed.
Thanks, Polite. Prof.
Yeah, thank you. For me, maybe in one way, the journey to restoring confidence in savings, among the many things I presented, is to just mention it's not a journey of one economic agency. It's not a journey of government alone. You need the government, the private sector, and all other economic agencies so that we fight and play as a team. Otherwise, none of them can do it alone. Thank you.
So true, no one can do it alone. Sam, your final word.
Thank you. So the one point is the professor's point around it's a multi-pronged, multi-stakeholder, and multi-player journey and agenda. I think it's also a multifaceted set of interventions in terms of, the savings and policies that go with that. But they are facilitating arrangements, your markets, your capital markets. There is also at the bottom financial literacy awareness, so people make rational decisions, but which are also ensuring that people know what they're buying and their appetite to then get the products can be developed. So it's a holistic view that we must always be thinking about. But the final point is, I think the small steps should be sustained and hope that we make them bigger steps. The directional thrust must be maintained.